All right, guys, thanks for joining in on this real sudden live show that we decided to bring to you based on the breaking news that is happening right now pertaining to the real estate market. And guys, I know there are so many people paying attention to the market. I mean, it's been really headline news, real estate for the last at least 2.5, 3 years as home prices have been soaring during the highest inflationary time I've ever seen in 30 some years serving the real estate industry. And, the most alarming thing that has recently hit the news, and that's why we felt it was very important to bring this story to you because so many people have no idea of what's going on right now. But FHA on March 8th actually gave the green light for a 40-year fixed rate mortgage in a modification or restructuring attempt to save homes from going to foreclosure. So we're going to talk about that right now. This is a live show. If you're on the stream watching us now, we will take your comments and questions. We'd love to hear from you. We're also going to kind of talk about the Fed next week is meeting, the next FOMC meeting, and the Fed, will they raise rates in their attempt to continue to combat inflation? As we know, the Fed met Congress last week, and we know that inflation is dropping ever so slightly. It's still a massive problem. People are feeling pain everywhere. And then we're going to kind of talk about the bank collapse, the recent banks that have imploded for whatever reason. There's a lot of reasons, and each one seemed to have their own. But we're going to talk about, what that means to the mega banks and how that may affect home mortgages. And with me, I have a fellow agent friend, Michael Bordenaro. He is out of Miami. Michael also runs a YouTube channel and has been dedicated for the last several years in bringing you the most up-to-date real estate information on the internet. Guys, I mean, we know where do you go to get good factual data because, so much of it is really kind of held back in Main Street media. So we know that, you guys rely on us YouTubers. We take this very seriously. Michael, thank you so much for joining us. Give the audience a little bit about you.
Yeah, thank you so much for having me on, Todd and Melissa. It's a pleasure being with you guys. I work down here in Miami as a full-time YouTuber now, talking about the real estate market and what's been happening in the economy lately. Because as you guys know, things have been pretty much on edge for a while. And it's important for people to really know what's going on because I feel like there's a pretty big disconnect between what you're seeing on mainstream media and what's actually happening, in the real market. So I'm trying to bridge that gap.
Well, you're doing a great job. And Melissa, thank you for joining us and helping us to moderate comments and questions.
Thank you, Michael. Thank you so much for being our guest today. And yeah, everyone, I'm going to be moderating. I'm going to be reviewing comments and questions, feeding them to Michael and Todd. So please, as they come up, I will do my best to filter through and get them answered. But Michael, thank you. And Todd, absolutely. I can't wait to hear what you're going to have to say today.
Well, we'll dive in. So, Michael, I know you have been in the real estate industry since 2008 when we experienced that big crash, for many different reasons. Some have similarities of what's going on right now. But anyway, I mean, you knew what happened back then. And, it was interesting because we saw, a 40-year mortgage introduced back then. And it was kind of really a different type of product because it was a 40-year amortization schedule, but a 30-year mortgage. So that balance ballooned in 30 years. But Michael, give us your opinion on, this horrible news, in my opinion, of the FHA, approving a restructuring program for a 40-year mortgage.
Yeah, so I'm glad you brought that up, Todd, because I talked about this last week when it first happened, and I think it's also terrible. Now, first of all, I want to make sure that people understand that I'm not against keeping people in their homes because I think that is important. It's better to have somebody stay in their house than go into a foreclosure. But unfortunately, this to me is one of these situations where it's just delaying the inevitable. It's, giving people that have debt more debt and bigger problems in the long run. Because the thing is, most people that have FHA mortgages don't have very high mortgage payments to begin with. So if they do a restructuring and they save them, what, $200 a month, and human behavior and the way that we see consumer spending these days, people will find a way fast to spend that extra $200 a month. And you did your loan modification in what, a year? Now you're broke again. Now it's time to figure out, how am I going to pay the mortgage? So I feel like it's just kind of delaying the inevitable. And it kind of puts people in bigger trouble in the end, because now you're going to be on the hook for more money. And, okay, you delayed a foreclosure for a year or two. That doesn't fix the underlying problem, which seems to be the typical path that our leaders are taking these days.
Yeah, FHA was actually created to, it's kind of interesting. FHA was created because of a mortgage crisis in the middle of the Great Depression around 1933. 40 to 50% of the home mortgages were in default. And, back then, home mortgages were 5 and 6 year loans. When people started migrating to the U.S. in the 1700s, I mean, from that point all the way up until the mid 30s, I mean, you had to put a lot of money down to buy a house. 50% was the going, deposit back then. And, basically you had an interest only loan, 5 or 6 year term, and then it ballooned at the end. But like I said, in the mid 30s, I mean, the default rate was so crazy. And then FHA came out. They were actually created to back these loans, insure these loans, because back then the banks, they didn't really like to lend money for a home mortgage. They were lending money to businesses. That's how they made their money. The banks lent money to companies. And so, they had to encourage the banks to believe in mortgages, because so many people were in default. And, it was terrible, right? During the Great Depression, and people were living in shanty towns and things like that. I mean, living in their cars. And, so they've been involved in kind of expanding and sort of, helping people get into home ownership. And Michael, I'm with you. I mean, nobody wants to see people homeless, man. I mean, that's a terrible thing, right? I mean, everybody should have a safe roof over their head. We are in such a situation, though, that we just keep propping things up. And, I mean, we did the mortgage forbearance, right? Government came up with that. Now we're still talking about people that are COVID affected. And I'm not trying to point any fingers at anybody. And man, if you're going through a financial hard time, that's awful, right? I mean, I can't imagine, I've been there through my career, but I can't imagine, for many what the last several years has been like. But like you said, how long do we keep propping this up? And I think the average on what that will mean in somebody's pocket is like $100 more a month. Michael, the things that concern me are this. I read an article today, and I have it pulled up here, and I'll just kind of read a few of the sentences here. But nationally, 5% of the mortgages originated in 2022 were said to be underwater as of quarter 3 of 22. An additional 19% of the mortgages originated in 22 have less than 10% equity. Now, being in the real estate industry, we know that if somebody wants to sell their house, they must have more than 10% equity in their home. Right. Especially if they haven't put a lot of money down, right?
Absolutely.
Because they're going to lose. Michael, we're seeing a lot of short sales right now already being presented.
Well, I think if the thing is, Todd, is if these people don't pay attention to this and they think that, going into this recession, that if things get bad, then I'll sell my house if I have to. Well, it's already going to be too late for most of the people that you just described, because unless they want to do a short sale, then they're going to have to come to the closing table, with money. You're going to have to write the buyer a check, or the mortgage company. And that's not a place that sellers want to be in. And I think that this pandemic buying spree that we saw with people just FOMOing into the market and paying far over asking price is a big part of that problem. And, everybody's to blame. The lenders are to blame for giving out the loans, and the appraisers are to blame for, writing up the appraisal saying that the house is actually worth this much. And now it's time to pay the piper, unfortunately.
What do you think is really going to happen? Do you feel that with the Fed, allowing for these modifications, does that open up the door for, FHA to further extend to buyers a 40-year mortgage? Is this the next step?
I think it could be. I would not be surprised to see that roll out, and then eventually maybe that bleed over into conventional lending. I feel like, the powers that be today are looking to do anything and everything they can to kick the can down the road and prop things up, as you said before, to make sure that no sort of crash or big economic downturn happens on their dime, or on their watch, And the thing is, they're all just delaying the inevitable, because you cannot delay these problems forever. They will catch up to us at some point down the road. And then when they do, it's just going to be far worse than it would have been if they would have just let it all happen 3 years ago.
This reminds me of Japan, and I think it was like 1990 when they went through, I think it was a 50-year mortgage. And I think that China has a product out there where it's a 100-year mortgage or a generational mortgage where, you start paying for it now and you pass on and you give it to your kid and they continue to pay for it until eventually, I guess, it's over. My concern is this. Yeah, it's laughable, right? My concern is this. Most people, I think it's fair enough to say, don't pay additional on their mortgage. Now, I don't have anything to back that up. I just know, if I polled the people that I know that have a mortgage, most people, they have intentions of putting a couple extra dollars down, but most people don't really buy it down heavily, right? And especially when you had a 2.75% mortgage, why would you, right? Why would you think of doing that? But by extending these loans, you already pay 3 times the amount of the house. And, the debate is, real estate is a depreciating asset. And some people say, no, it's not. Look, I've been in a real estate investor for 25 plus years. It's a depreciating asset, right? If you're not continually spending money on it, it goes through obsolescence, whether it's structural or functional obsolescence, whatever it is, right? It goes through periods of obsolescence. You have to bring it up, or it's just not worth it as much as you'd like to think that, or realize in current day. So, the question is now, we know that you're buying a payment. Well, a lot of people, Michael, we deal with this. A lot of people, when they go to sell a house after they've been in it for 10 years or 15 years, that's almost like their savings account, because they've bought down a lot of the principal balance. So now they may not have, the last 2 years they had tons of equity and didn't have to fix anything, but in a normal market, if we ever get back to that, you don't. So what happens to these people, Michael, now that they're restructuring? They probably haven't fixed anything. Are they going to go through another safety inspection to where, the FHA comes in and says, oh, you got to fix these things? The roof is now bad than when you financed it 5 years ago. It was in the final third of its life.
Yeah,
what's going to happen?
Yeah, I think that's definitely on the table. And I think, people that don't want to make the necessary repairs or do what's necessary to get that extension will be into a forced sale situation. And that's just another domino to fall, in my opinion, when it comes to the coming inventory on the housing market. I think a lot of people are going to be forced to sell, as things worsen in the economy. And that's just another example of it, if you ask me, Todd.
Do you think we're just kicking it down the road?
I think so.
I do too. So what kind of similarities are you seeing? Do you think that one of the reasons we're not seeing inventory, and it's terrible to say people lose their homes, right? But do you think that that has anything to do with the shortage of inventory, the amount of people that we typically, see get foreclosed on an annual basis? I mean, it's been through history. People lose their houses. Do you think that's impacting the market from an inventory standpoint?
Yeah, absolutely. I don't remember exactly how many, are in some stage of foreclosure at this moment, but I know it's been a couple 100,000. And we know it takes a long time for foreclosures to come into the market and, be listed for sale. So that's probably not going to happen anytime soon. Maybe starting next year, we might start seeing some of them, or maybe some of them at the end of this year, at the soonest. But I don't see a big wave of foreclosures coming for at least another year, maybe even longer. And in the meantime, everybody says, well, all these sellers that or all these buyers that bought property and they have the 3% interest rate, they're never going to sell. Well, life happens and people need to sell for a lot of different reasons. I mean, I even made a full video a while ago outlining the dozens of different reasons of why someone like that would need to sell. Because, as much as you try to make plans and secure your future when it comes to buying a home, it just doesn't always work out the way you thought. And I think you're going to see those people listing homes for sale. And you're going to see people that tried selling their homes maybe a couple months ago. They weren't getting any offers. They pulled it off the market. And then we're going to have this spring inventory coming very soon. I think you're going to see a lot of those people try again. If you look into history, every single year we see a huge surge in inventory from about March through July every single year. And I think that will happen again.
Yeah, well, look, I'm on Freddie Mac's website here, and this is really geared towards the servicers, of the loans. And this basically, I was going to go over the PDF that is really in depth, but it was 734 pages, I think, in length. So I wanted to kind of spare everybody. We would still be talking about it this time tomorrow. But for anybody that would like to go on and check it out, look, guys, if you're experiencing issues paying your mortgage, and we know that's happening right now. I know locally here, I spoke about it on a video about a week or so ago. I was looking for a property in a specific area for an out-of-town buyer. And 3 of the 5 calls that I had made, basically were talking about a short sale. One of them or 2 of them were definite short sales. And one of them said that they've dropped the price like 6 times over the last, 140 days. And they said, if we drop it any further, that will be a short sale. And, there's a process in a short sale because you have to get your lender, you have to communicate and you have to get your lender to, agree to take less money than what you owe for the property. But I just want to go over, so this is products and programs, and I just want to kind of go over, these are all geared around people and programs to prevent foreclosure. So you have forbearance, and it's not just COVID related. There is a disaster type of forbearance program. And then there's just a standard forbearance program. You're going through a tough time. You can't make your mortgage. Then there's repayment plans, and where they kind of bring options into the different scenarios that you may have. And there's payment deferral where you kind of kick it back, and flex modification, and then short sale. This is where you sell it. The lender agrees to take less, and if you kind of dive into this site, there are fees that are available for servicers to kind of help people process a short sale, get your lender to take less money than you owe, and then sort of deed in lieu. It's a faster way to kind of be foreclosed on, and then disaster relief and military relief specifically. But these are, these are all outlined in depth. And now the reason, ladies and gentlemen, that we're kind of talking about this right now is that I believe that FHA sees a major problem. And, and it's kind of interesting. And Michael, I like your take on this, but are we the last to know these things? I've had callers call in. I've seen it firsthand where builders recently have raised their prices in new communities. They're slowing down their construction starts in some of these neighborhoods, even though they have a lot more permits. There's been tons of permits pulled. So they're planning on building, but a lot of builders have backed off their starts and raised their prices on houses. We see across the country, we saw price declines. Now all of a sudden we're starting to see price increases again. You know, maybe they know something that we don't. Maybe this is all part of, there is no inventory, and, the FHA is going to step in here, save all these people that are delinquent that would otherwise be inventory on the market. Do they know what we don't, Michael?
Well, I think that the recent bank failures is probably a good analogy of us being the last to know everything these days, because obviously people that pulled their money out of that bank knew something before most people did. And obviously this could be another situation just like that. I'm sure that the FHA is realizing that a lot of these people, if they don't step in and help, they are going to lose their homes to foreclosure or a short sale. And I don't know if it's so much about suppressing inventory as much as not wanting to deal with as much of the, more homeless problems and, more unemployment and welfare problems. I mean, I don't know what their motive is to do this really, but like I said before, I think it's just delaying the inevitable. You can only help people for so long, and then they'll have to figure it out on their own.
When and how does the government back out and let the people figure it out?
I keep asking myself the same thing.
I mean, I know. I mean, look, I don't know. If you ran your business into the ground like the banks did, I mean, it was pure negligence, I think, in SVB, excuse me, SVB, right? They didn't have a risk manager. I mean, there was craziness going on, right? If you run your business like that and you fail, who's going to step in and help you and make sure that you can pay your employees on Friday?
That's right. I think we're starting to just see like there's two sets of rules now for everybody, Todd. And if you're not in the club, then you don't get the access and the privilege to that higher set of rules, it seems like nowadays. And, when it comes to FHA starting to help people out with this, it seems like nothing is what it used to be in terms of like, all right, you signed on the dotted line for your mortgage. You agree to pay this much every month. And if you can't pay, then we'll take your house after a certain amount of time. But now everything is like a modification of that. Well, that's what we said in the beginning. Now we're going to change the rules halfway through the game, and we'll figure out a different way from here instead of that. And that's part of the problem, I think, right now with everything.
Well, I can tell you one thing, the Fed meeting next week. I mean, this is I think a lot is hinging on this, right? So if and that can kind of segue us into our thoughts here with this, because I have my opinion. I'd like to know yours. We'll take a couple questions. Actually, before we do that, do we have any questions, Melissa?
We do. I want to touch on two comments. First, we have Suhail, who is one of our agents. He had said SMR has crashed to record lows. 40-year mortgages will have much higher rates. Homeowners will never build equity if home prices don't appreciate. We also had another comment from CF Mendez. All of these Band-Aid solutions and bailouts for the rich entitled are dooming the average hardworking Americans. Enough with the shadiness and corruption in our country. So as you can tell, I mean, people are extremely frustrated. We've got Jordan here. Will prices even go down? Seems like supply will not increase as expected given recent moves unless unemployment skyrockets, which likely won't happen.
So, Michael, do you have anything to say about that?
Yeah, well, that last comment there, I do think prices will still go down because one of the major headwinds that buyers are facing today, which you can easily see in the data, is unaffordability. People cannot afford these mortgage payments today. And doesn't matter how many homes are on the market for sale. If people can't afford to buy them, inevitably that will make prices come down. But like I said earlier, every year we see a surge in inventory starting right around now through the summer. And I don't see any reason why that won't happen again. It even happened during the height of the pandemic years. And now that we've made it past that, I'm sure that's going to continue to happen. And as far as unemployment skyrocketing, all it's going to take is maybe a couple more bank failures and, more problems with that. And who knows how much unemployment could go up, because we haven't even seen the ripple effects from the bank failures yet. It's only been a few days, guys. Let's remember that, we haven't seen the consequences of this yet. So
what do you think those consequences will be?
I think they're going to see more layoffs, especially with how much this affected the tech area. We've seen so many layoffs in tech. And when there's layoffs in tech, then you see, problems throughout the rest of the economy. Like if people in tech don't have money to spend in the local economy, well, those guys are big money earners. And it means they're not buying luxury products or vacations or going out to eat as much. And it has a ripple effect throughout other businesses. And then when other businesses don't do so well, then they might need to get rid of some people. I mean, I just saw a couple of days ago, you see Tyson, the chicken company, they're laying off 1,700 people. What? People aren't buying chicken? Give me a break. Everybody still buys chicken. Okay. So it's happening everywhere.
Talking about the bank collapse, Bank of America, I saw it on an article where they got $15 billion as a result of the news coming out, right? $15 billion. I think they lost like $8 billion in the fourth quarter. Between the third quarter and the fourth quarter of last year, they've been watching depositors' cash going out the door, right? For many reasons. Number one, we've blown through all of the stimulus money. And people say, why are you still talking about the stimulus money? I only got my $3,600 or whatever it was, $3,000. I don't know. I didn't get any stimulus money. But what people are, they comment and they talk about that. Guys, there was a lot more stimulus money than that. I mean, these businesses have PPP money, this payroll protection. And let me tell you, I know people that receive this money that I don't know that they needed it, right? But it was all forgiven. So we're talking about a lot of cash out in the marketplace. We watched bank accounts peak to all-time highs, historic highs. People have more money in their savings account or bank account than we have ever had, right? When we look at the chart. And now it's all the way the opposite, from the highest amount of deposits to the least amount of money in the bank in 2 years. So, I think we've seen the stimulus go out the door. But when we see banks hitting headline news like this and people start worrying about their money, how is that going to affect the local or regional banks? Because the money is, they're like bank runs. So you could say it's a bank run where somebody goes out and they go, give me my money. I want to put it in my pocket. Or you could say, I'm transferring my money to the too big to fail, theoretically, right? Like Bank of America. And all of a sudden they get an influx of $15 billion in cash, right? What kind of a ripple effect does that have on the regional banks? The commitments that they have, the bonds that they've bought and will be forced to sell, or, paying their bills for that matter.
Yeah, absolutely, Todd. I think that that's going to be a problem that we haven't really had to deal with yet. And since it's all just started this past weekend, we don't really know how that's going to affect these smaller banks. But if more people continue with that behavior, you saw how much the 2-year treasury yields dropped in just 1 day or 2 days, whatever it was, record numbers since 1987. That is unbelievable. And that just goes to show you the panic in the markets right now, that people do not want to have money in the bank and they just don't want to be taking so much risk. And then otherwise you wouldn't be seeing that type of frantic behavior. And that's why I'm telling people, we haven't seen what the consequences of this are going to be yet. And we can guess, we can speculate, but we just don't know yet. It's still too soon to tell.
I think that we do need to guess. And I think we do need to speculate, because I think it's really hard to get good, honest, forthright information. I feel like we're told what we're meant to hear. And and as a result of that, I mean, Michael, you're a YouTuber and very successful at that. You bring great information to anyone looking, to learn about what's happening in the real estate market. But how difficult is it for you and me? And how many hours do we have to scour the internet and try and find data and try and find non-conflicting information? And it's so skewed, right? And the headlines say one thing and you think, oh great, this is going to be where I can get some good information. And then the article doesn't even address the topic or the headline.
Yeah, I see that a lot. I feel like that's getting to be one of the easier parts of my job, is kind of like reading between the lines. It doesn't really matter what the headline says. If the info's not there in what I'm looking for in a particular news story or data set, then I move on, because clearly then it's just, a bunch of mumbo jumbo telling people what they want to hear. And I'm not in the business of that.
So before we move on, 40-year mortgage, what's your advice? Do it or don't?
If you're in that position where you need it, you mean?
Yeah.
I say don't. I say figure out another way to keep up with the payments that you already have. Because if you do it, you're just kind of doing what the government's doing and you're delaying the inevitable. Sure, maybe it might help you now, but you're going to have, you're going to have longer time to pay off this debt. You're going to be deeper into debt. And rather than go deeper into debt, I'd be looking to get out of it faster, which is kind of running the opposite direction. How can I make extra money so that this is not a problem anymore, versus, asking the government to help you with everything?
I want to know what the fees are. I've yet to find out what the fees are. So I'm trying, all day I was trying, like, what are these fees? What will it be to redo all of this paperwork? And I spoke to a lender friend of mine today, and it's funny because I want to say real quick, this is so new, guys, that even FHA doesn't know about it. Can't make this stuff up. So, I mean, I spent probably an hour on the phone calling FHA, going through the hotlines, the information sources that are available, and finally I talked to somebody, and they wanted all of my details, right? All my information, whether I was registered with HUD, for my brokerage and all that stuff, which I was. I had to dig up some stuff. I mean, she said, well, if you don't have the information, that's okay, but we'd really like to know it. So whatever, here's the information, right? Guess she wanted to know that I was a real estate broker asking these questions. And she said, let me find out for you. Can I put you on hold for a couple minutes? What's going on? She was very kind, very nice, very helpful when I finally got through to somebody. And, she came back and said, yeah, what you're saying is true. I mean, it is. I don't personally have a lot of information on this, but let me send you an email with what I do have. And she did. She sent it to me. And basically, it was an idea that was cast in 2022, I think April, and they just gave the green light to it. But I do think that, when we're getting into this, what will the fees be? So what do I do as a result? Well, I start picking up the phone and calling my tree of lender friends, right? What do you all know? Because I saw a news source, this is crazy, down in Florida where you are, Michael, and the article, it was an article and it was actually a news clip, like a video. And they were talking about buyers being able to get a 40-year mortgage, and they had an agent on it. Oh, this is going to be so great for my buyers. I am just so happy because they're going to get to save $122 a month on the average house, financing it over the next 4. They're going to spend $170,000 more for the house over the next 10 years on, but they're going to be able to get the payment that they want. I'm thinking to myself, like, give me a freaking break. So I had to reach out to this news source because I said, where did you get this information? Where is it anywhere that FHA is now writing new business, not remod, but new business for 40-year mortgage? I thought maybe I wasn't typing right, or my computer refused to give it to me. But I can tell you that hasn't happened yet, right? But you can get a 40-year mortgage. They do exist. They are, non-QM mortgage companies, right? And you guys can look it up. I'm not a lender, but you can get a 40-year mortgage. but the bank, I think, has to portfolio the loan, meaning they have to hold the mortgage in-house. So it's not your traditional mortgage. In fact, when I talked to one lender, they said, oh, the 40-year mortgage is illegal based on the Dodd-Frank, act that happened as a result of the crash, right? The last real estate crash. Guys, I'd like to see you in a 15-year mortgage, not a 40-year mortgage. I mean, we're going backwards here. We're talking about, financing houses for 40 years. We're talking about you are renting. You're renting your house at that point, and you're making all the repairs. Now, I'm sure I'm going to have a lot of comments saying that I'm wrong on that philosophy, that most people sell their houses. Guys, a lot of you that bought houses in the last 2 years, you're underwater. You don't have 10% equity. You cannot sell your house and pay off your mortgage. Many of you, right? You need time to go by. And I hope you have money in your accounts to fix things, because this is serious. So, this is kind of what we've been talking about. Now, do prices come down? Michael, what is the Fed going to do next week? Can you imagine being Powell?
Well, I know exactly what I would do if I was Powell.
Spill it.
If I was Powell, I would just continue with the rate hikes. And you know why? Because it's just another version of what we were talking about earlier. If they don't, then it's just kicking the can further down the road. And with the most recent inflation report it's not going down. It's still a big problem. And if they, put a hiatus on the mortgage, on the interest rate hikes, that's just going to make inflation worse. So, okay, great. We don't have any more bank failures maybe for the next couple of months, but you think they're just going to, start reversing? This is not going to be a pivot. It's not going to mean that at the following meeting that rates are going to go down, because they can't lower rates right now. Otherwise, inflation will, spiral out of control. And they've said, Powell said time and time again that getting inflation under control is the number one goal. And I realize that these recent bank failures might alter what they're going to do next week. But if I were him, I would just do the right thing. And to me, the right thing is to just continue with the rate hikes, because if they don't get inflation under control, forget about the bank failures. We're going to have all kinds of other problems that are going to come along after that. I mean, you're going to have, people defaulting on all different types of loans because, inflation is raging out of control. They can't afford their monthly bills. You're going to see unemployment skyrocket. And it's going to make problems so much worse than they are right now. So I would be looking at, do we care if there's 10 more banks that fail, or are we going to sink the whole economy? That's how I would be looking at it.
Well, it was meant to be a bail-in last week, when the banks were being shut down, and it ended up being a bailout. Our current administration is saying that it's not going to cost the taxpayers any more money. I don't know how it can. I mean, we already don't collect enough taxes to pay our bills now. And we are in a serious situation. I agree. I mean, how does the Fed pivot right now? We're looking at home prices that have never been higher. We're looking at people that can't afford it. There's 70-some%, depending on what article you listen to and what poll it is. It's a huge number of people that are in buyer remorse right now that bought a house in the last 2 years and are like, I know a few of them myself, right? They were like, oh, we are fine. We can do it. We can make it. And then they lose a job. And now they're like, oh man, this is serious. Like, I need to find another job, or, maybe in a couple months, we're going to be defaulting in our mortgage. So, we know there's a high remorse. We know that there are people that are still wanting to buy. I think the Fed is going to have to stay on course, though I don't like it either way. The scenario sucks. I mean, I think, we raise rates, we're going to cool demand, and it's going to cost us jobs. But I don't think they can turn back now. I think if they do, like you said, inflation is just going to get a boost, man. It's going to be like on steroids.
Absolutely. They have to take care of this now while they still can. And honestly, even my opinion is that it's still been too little too late. Even though they're raising rates faster than ever, it's not working fast enough. And some people will argue the opposite, that, well, these bank collapses is proof that it's not only working, but they've went too far. But I disagree. You're just talking about negligence and people not running their businesses properly, like Silicon Valley Bank. And, not even getting into the bailout situation, you're seeing, I mean, nobody should get more than the $250,000 FDIC limit. That's another example of the rules we were talking about earlier, Todd. You agreed to this mortgage, all right? So now you pay the mortgage. There's no modification. There's nothing like that. Oh, you agreed to put, more than the limit into the bank, and now you're losing. Well, that's too bad. That's how it should be going down. But unfortunately, it's not.
Man, I'm looking for a wet rag, man. I'm thinking I'm getting ready to, but you're right. I mean, what more can we do? We have to be responsible people, right? We have to be responsible people. And by the way, that's just because I'm not in that situation, but no, I'm kidding. I care about people, man. But let's take some questions, Melissa.
We've got Brody asking, wouldn't 40 years be beneficial to landlords?
Michael, you want to take that one?
I guess if, it lowers your monthly payment and, it increases your cash flow, sure. I don't know if this is going to be something available to investors, though. As far as I know, nobody can really get this right now, but we haven't seen what this looks like yet.
I just had a epiphany. This comment, right? I just thought of something. Thinking to myself, how much pressure is really on our administration right now from some of the largest institutional owners of real estate to extend mortgages, to just let these things, the appreciation, let's just keep the home price appreciation. That's what kind of is like in the back of my mind right now, where I'm thinking, of course everyone's going to have a 40-year mortgage. It's only a matter of time. This is going to go so smooth. They're going to say, this is such a great idea. This was such a genius idea that we've been able to take mortgages from 1939 to 5 years to 40 years here in 2023. And it's working out so well that we're just going to let everybody do it because we need money in the bank. We need people to invest in mortgage-backed securities. We need to keep the flow going because we can't let the housing market crash, guys. If we let this housing market crash, these big institutional businesses, they're going to be really hurting. Not only that, a lot of people are going to lose their investments.
I think they're looking at it the wrong way. I think they're looking at it the wrong way, Todd, because that is maybe what they're thinking. But on the other hand, on the flip side, if they let it crash and just let the market work itself out, then it becomes an opportunity for investors, including institutional investors. And, now you're able to pick up properties for far less than before. So you take your losses along with your gains. And that's the way it's always been done.
But they're out of money.
Yeah.
I mean, they'd be out of money at that point. I mean, Silicon Valley Bank needed more money because people were pulling their money out. I mean, so if I'm investing in your REIT or your mortgage, your real estate buying business, and I'm afraid you're going to have to lock it down so nobody pulls their money out. Because all of a sudden now people are like, oh, no, this is too risky for me. The real estate market's crashing. I need to pull out all my money as quickly as I can. I don't think they would be able at that point to buy any more real estate.
Well, somebody will be able to, that's for sure. Maybe
the home buyers.
Yeah, exactly.
Maybe homeowners would be able to do it, man. That would be great.
I think
Melissa,
there's definitely people hanging out on the side there that are going to be able to pick up properties, whether it's mom and pop investors or, regular home buyers that have been patiently waiting, being responsible, saving money, staying out of debt. There's going to be people ready to buy in a situation like that, but maybe just not, the pals of the elites.
Yeah. Let's
We have
take
a
some questions.
super chat here. Junie, thank you so much.
Junie.
European Central Bank has opted for a rate hike, and Powell, too, could make a similar move to keep inflation in check. We don't want average houses to be 1 million.
Hey, France just raised the retirement age too. Did you see that?
Yes, I did.
They pushed it through with no vote.
That seems to be how everything goes now. No vote. You don't get to say so.
Hey, you're 62. You'll be 62. I'm sorry. You gotta wait another 2 years.
Yeah.
Got another
Yeah,
question here about the 40-year mortgage. Do any of you, Charlton, thank you so much for your question. Do any of you see adjustable 30 to 40-year mortgages coming?
I think anything's possible at this point. I would not put it past any of our regulators or lenders at this point to come up with some sort of creative financing solutions to keep, everything going. Because every single week I get emails from mortgage lenders and brokers, and the things that they're telling people to get out there and buy still now are kind of laughable at this point. But I'm sure some people believe it. And, if they need to start coming up with new programs to entice people to get in, then maybe they will do that.
Yeah, I totally agree. Definitely, Charlton. Always appreciate your questions and comments.
Mm-hmm. We've got Rev Nation here. Why haven't rates dropped prices?
Well, they have.
Michael?
It just depends on where you look. I think some people get caught up in their own local markets too much, and they don't see the bigger picture of things going down. Like, for example, I always like looking at Redfin's data, because every single month they come out with a report on where things are going. And go look at that right now, Rev Nation. Go look at the median home price over the past 8 months in the U.S. It's been going down since June of last year. And that's median data across the entire country. But that doesn't mean it's happening everywhere. There could be areas where you're still seeing some prices go up. I live in one of them. So I understand the disconnect there, that you're hearing everybody say that home prices are coming down, but you're only seeing them go up where you live, which is totally possible. And usually what it comes down to is affordability. It means that people in your area can still afford a home at this price and this interest rate. And until that is no longer the case, it likely will still continue to rise. Like in Miami, for example, it's kind of disconnected from reality. That's not really how it works here, because we have so much influx from outside investors pumping money into the market. Because if you were just to look at affordability here, it's disconnected from reality. It's not connected to what people make and their wages. There's just a lot of outside influence. So there's so many different things that can affect the housing market where you live, or the market that you watch, that might not correlate with the overall data of what's happening on a nationwide scale.
And I think, Michael, to your point, these outside investors, they're cash rich. And, a lot of them, they're in the stock market. They're in some of these banks. They have way more than $250,000 sitting there in cash in a lot of cases. And I think that one of the things that I guess I have as a concern is, depending on what happens there, we're going to see a lot more of these, homes being scooped up by cash buyers, even though they are, what we're saying, overpaying. And, I think they're looking at, hey, look, at least it's a physical asset. It's not in the control of somebody that's going to yank their $3 million out and sell off their stock before anybody else knows that the ship's going down. And, and I'm going to be wiped out. At least I have a physical asset that, I can kind of hedge against. And I think, but yes, we have seen major price declines. We've seen them. Guys, we were looking at $50,000 as a national average over list price, home sales. So that was across the nation. I've seen houses sell for $150,000 more than top end list price. People weren't looking at the list price and going, is that price right? What they were doing is saying, oh, if that's the list price, you got to go 10% or more higher than that. Nobody was sitting there saying, was that a right, an actual good value for the home as a list price? And then what was happening were people were saying, well, if you want it, it's never going to appraise. Sellers were running away with that, and so were listing agents, right? Because, it's never going to appraise regardless if we bump it 50 grand on takeoff or not. So we may as well say, okay, so if you want it, how much cash do you have to bring over appraised value? So it wasn't what the price of the house was when we were looking at contracts, negotiating them. It wasn't what's the offer price. It was how much over appraised value in cash do you have? And they were the ones that were winning the deals, at least, a lot of the deals that we were doing. So I think that when we're looking at, we're not seeing that now. If a agent goes in and prices it right, if they're a good agent, they're doing that. They're telling the seller, don't overprice this thing. So when we're looking at, home sales that sell over list price, you have to be thinking about how that was priced during takeoff, right? The beginning of the hitting the market. So, a lot of the comments and calls I get where I can't believe, this house down the street from me went for $10,000 over list price. Well, if they priced it right, that's quite possible that you can still get those bidding wars. But I promise you, these houses that people know are overpriced, that they don't see the value, they're sitting. They're sitting on the market. We're seeing it. We're watching days on the market rise. So when you start seeing that, you have to have a conversation. I spoke to an agent yesterday about a property that my client would buy if the price were $150,000 less. And I said to the agent, my client doesn't want me to write an offer. It just wants me to ask you, will your client consider this offer? And she came back and said no. And I'm like, well, that was quick. You didn't even ask your client. And she said, well, we turned down an offer that was actually higher than that 3 months ago. I went, okay, well, 3 months ago, maybe your sellers have come around to their senses. Do you think maybe you could ask them now? She said, oh, yeah, I'll get back to you. I'll ask them. Well, thank you. Thank you very much. So, they came back and said no. But my point is, well, what she did was she came back and said, can you move them a little bit? Could we get a little bit closer to this price? And my buyer basically said, we'll wait. We'll wait it out. So I think that we are seeing prices come down, guys. Every market's different, just like Michael, stated. And, I was looking at Miami on, a couple of the reports, and you're right, man. I mean, I don't know how anybody could afford to buy a house in Miami. But anyway, what else we got, Melissa?
We've got some super chats here. Orlando, thank you so much for viewing tonight. You got 40-year mortgage, LOL, anything to keep it going.
You must have landed, buddy. I knew you were on a plane a little while ago, so thank you so much. We're glad you jumped on. I said, Michael's coming on the show, and he said, oh, man, that's going to be awesome. I will definitely be logged on. So we're glad to have you here. Thanks for the chat.
And we've got Junie with another one. In the TikTok era, the 40-year mortgages, slow equity buildup, and higher interest are less effective as outdated Fed tactics are swiftly exposed.
You're right. I hope you're right, Junie. Thank you so much. But yes, I mean, it's, we'll see. We'll see what happens. We'll see how many people bite this. I hope we don't start seeing this as the norm. Guys, I might be looking for another career. I mean, I might be with Michael and try and just, make money talking to you guys. So I mean, maybe I'd be better off than trying to convince people to a 40-year mortgage. Good grief, can't even imagine.
We do have an interesting question here from Tage's World. Do you think there will be a cap on how high interest rates can go? It should be illegal for it to become unreachable for the majority of the population.
If we look at history, that wasn't the case. There was no cap on it before. Last time when we saw interest rates rise to close to 18% in the 80s. So I don't think so. But then again, the rules of the game have changed quite a bit. The thing is, though, you can't look at it as it's not fair or unreachable for the majority of the population. This is the path for it to become reachable for everyone. Without these interest rate hikes, it will never be affordable. That's the problem. And the thing is, you're going to see cash buyers go out there and still buy because now is a good time to be a cash buyer. You have more leverage. You're not competing with the interest rates. And, but nobody has an unlimited amount of money, not even these big hedge funds. And they only buy in certain areas. They target certain properties. They're not going to buy everything. And, it needs to go higher. That's the only way for affordability to come back.
Yeah, I totally agree, Mike. I mean, it's, so I think, I was looking at this earlier today. I think it was 18.6% was the all-time high 30-year fixed mortgage rate. That's crazy. Can you imagine? I mean, we're looking at credit cards. I mean, that should be something that is capped out. I mean, these credit card banks, these too big to fail banks, these credit card companies they're just raking people over the coals right now. I mean, that can't afford to pay their bills. And I want to say something else too. It's kind of like a sidebar here. I was talking with a contractor friend of mine today, and he's risking losing his contractor license because you have to submit your credit report when you renew your license. And I know so many people right now are getting hammered on their credit report. Their credit scores are dropping. They're falling behind. They're being delinquent. People that you wouldn't even guess. I mean, I'm hearing these stories and talking to people, and I'm just shocked of people that you think are doing well, and they're not. And Michael, I don't know if you're seeing that, but I know I was listening to your last video, and you were talking about some of your audience that was, commenting in and kind of sharing with you some of what is going on right now, the money that's being stripped away, that they've saved or thought they had, and, the different things that are happening. I don't know if you care to share any of those stories.
Well, I feel like there's still like a split of a group with people that watch my channel anyways. Like, I know there's a lot of wealthy people that watch my channel and are not affected by a lot of this, but there's a good chunk of people that are just barely hanging on that watch my channel, and they do share stories with me about how much they're being affected by property tax increases. A big one here in Florida especially is home insurance increases. That's been, detrimental for a lot of people. And when you combine that with inflation and, you got to raise 5-6%, but inflation is up more than that just a few months ago. And it's just not enough to keep up for a lot of people. And I think, most people are just having such a hard time right now. When it comes to the credit card debt, I do think there should be some sort of a cap, because that's a totally different story than the mortgage rates. That's basically just thievery at that point when it comes over 20% rates on credit card debt. But anyhow, people are turning to their credit cards now to buy groceries and pay bills. And we have now seen the amount of HELOCs that people are securing higher than they've been in like almost 20 years, something like that. And what does that tell you? That tells you that people are digging into their home equity while they still have it to pay for things. Now, I know some of them are trying to save it and use it for a rainy day. They're waiting for an investment, right? They want to be smart and use it to buy an investment property, another house. That's probably the only smart thing to do with a home equity loan like that. But a lot of other people use it as a backup, another form of a credit card, a piggy bank to just get by. And, that's unfortunately where a lot of people are at.
Yeah. Or let's renovate the house. I mean, how many people did that, right? They got a HELOC on the house. They took the equity out of their house. Now they're paying that adjustable rate, second mortgage essentially. And you're right. And I think that I know somebody that did that. They took out a HELOC on their home. They had a lot of equity. They bought a home and turned it into a rental property, and it became a disaster. And now they're paying on both sides of it, right? The tenant that they had didn't work out, ended up costing them a lot of money in repairs, and now they weren't not able to buy down that HELOC, and people are just getting hammered with that right now. You're exactly right. And a lot of these credit card companies, they kind of egg us on, like, oh, you're doing so great. Let's bump you up another $5,000. And you're like, whoa, this is great. I've got $5,000 more to spend. And terrible. So a couple more minutes here, guys. We really appreciate you being on with us. Michael is so generous to come on with us today. If you guys have not checked out his channel. He does an amazing job. And like I said, he is full time of bringing you up to date in real estate. Has spent many years in the real estate market, serving buyers and sellers, and got in right around the last crash. It was probably his fault, the reason it crashed. He got his license and jumped into real estate, and then the bottom fell out of it. Anybody ever tell you that before?
Oh yeah, I mean, people were looking at me, being like the young kid in the office, like, what is this guy doing here? I mean, it's just like I'm sitting here struggling to survive. Now I got somebody else to take my place.
Yeah, absolutely. Melissa, let's take a couple more questions and then we'll sign off.
Sounds good. We've got Isaac. Is buying and hold land when the market bottoms, then building a good idea?
Isaac, I would say, because I've done this, and it's not impossible to build on land, but when you're buying unimproved land property, you have to make sure a couple things are very important, right? One is it needs water, because a property is worthless without it. And there needs to be some type of sewer, whether it's a private or public. So if you have public water and sewer, and it is readily available or on that lot already, I mean, that's a great idea. It's a much easier process in developing it to build later. And then you have to decide, are you just looking for land to buy one house, or will you need to go through a land development process because you want to break it up into different lots? That's a business in itself and very costly, a lot of out-of-pocket expense up front. It could be, just to give you an idea, I mean, a 3-home subdivision here in Maryland can easily cost you $50,000 to $70,000 just going through the land development process in itself, and that's before you stick a shovel in the ground. So that is sort of my advice with that. But I will tell you on another thing with, especially in Maryland here, we have a lot of building moratoriums that go in and out of effect, meaning that when the schools primarily get overcrowded, they stop issuing permits for new home construction. And that has tied a lot of people up through the years, because I know a lot of areas right now are currently in a building moratorium, so they're not allowing building to happen. So there's risk in everything. I would say, when I'm looking for good investments, good real estate investments, I'm looking for properties that can have a higher and best use than what they currently have. And so I'm looking at the lot size. I want it to be improved. I want there to be a building or a house on it. And, I'm looking for property that can be subdivided, something I can utilize the property with rental income while subdividing, going through that process. And then the upside is an extra lot maybe, or 2 lots. Or I'm looking at neighboring zoning, and I'm looking at the property and saying, can I use this property for anything else? And a lot of times real estate agents make mistakes. They don't list it with the upside potential. So if you dig for those, you could still find some really awesome buys, investment opportunities right now, even if you're overpaying, because it has such a significant upside. But I would just be careful. If you want to send an email to us and give us share a little bit more specific information, maybe we can give you, some more specific advice. Michael, you have anything to add to that?
I don't think I could have said it better than you, Todd.
Well, thank you. What else we got, Melissa? Let's take one more question.
Yeah, I mean, this is what it is, right? This is what everyone wants to know. Letitia, thank you for your question. How much longer until this whole thing crashes? I can't take the slow pain. LOL.
I'm going to pass the buck off to Michael on this one.
Well, just go ask somebody who lives in San Francisco or Phoenix or Austin, Texas, and ask them how much longer until it crashes, because it's already crashing in those areas. How much longer it's going to take to crash where you live is unknown, because we don't know where you are or what the dynamics are there. But the thing is that a lot of people forget, and I think this is part of the, the society we have today, in terms of everybody wants the instant gratification. If you look at the last housing crash, it took almost 5 years for it to go from the top to the bottom. And this just started last June. So we can say, what has it been? 8 months? It hasn't even been a year. So it's going to take some time for this whole thing to play out. And now we have these wild card factors introduced into this now with bank failures, and who knows what the Fed's going to do. Last time we weren't battling inflation like we are now. So there's a lot of things working against us right now as well that are going to influence the housing market. And like Todd was saying earlier, like even me, if I had a couple $100 million right now, I wouldn't be sticking in the bank. I would be going and buying real estate with it. I don't care what it costs, because at least I have a physical asset or something that I can touch, and it's not going to get robbed from me, through the banking system, because maybe there won't be a bailout next time. So there's a lot of things that we just don't know right now. And I think that that's part of the problem. And everybody wants to see things happen today. People think that real estate is like the stock market, and they see, these huge losses on a day-to-day basis. And it just doesn't work like that with real estate.
I wish we had a ticker that we could see. You know what I mean? I wish that we're always looking at backward-looking data. I mean, even for us in our MLS access, you would think that I would be able, as a real estate broker, to log into the computer and get current, up-to-date sales information in any neighborhood that's in my market that we serve, right? You would think that would be possible. I have to tell you, it is so frustrating what I have to go through to, mine information and mine data, try and predict what is going on. It's backward looking data. But, I think like Michael said, every market is specific. We know real estate is a market specific industry, but I can tell you that I think this is far from over. I am completely thinking that, on the bearish side of things, I think that, the Fed, I can't imagine them pivoting. I think more rate increases are coming as soon as next week. And I think that, based on the state of the economy right now, I don't know how they're going to, we might see little bumps, glimmers of hope that things are just going to smooth out and be great. But based on the debt, based on the printing of money, based on the decisions that are being made, in my humble opinion, based on, the prices and, unaffordability of just about everything. Michael said it. We're financing our groceries on our credit cards. Just looking at that data and information alone is telling me we're going to see an adjustment. And I still think we're going to see some type of a crash here, whether it happens now or whether we can prop this thing up, because let's face it, 2024, we've got a big election. Who wants, we've got probably one side that would love to see it crash harder than ever. We have one side that says, if we let that happen, we may be turning the reins over. I mean, look, I'm not trying to, this is facts. You guys are intelligent. You can figure this stuff out for yourself. So is it shocking to me to see that we're buffered in, what is really happening right now? I think, no, it's not shocking. Is it shocking to see, bailouts instead of bail-ins with the banking collapse? By the way, something we haven't seen happen since the 2008 crisis. Right? And we're already seeing how quick we are to respond to, oh, guys, everything's fine. Don't panic, don't panic, don't panic. Well, how much of that can we take is the question, right? How much of that can we take until we see panic? And then, guys, like we saw it, what happened when the pandemic hit, when we locked everybody down, we watched it go in 2 weeks, shelves being completely empty in our grocery stores across America, right? Let's not forget that, right? Let's not forget just how vulnerable we can be to anything happening. So I understand the sensitivity, but let's be smart. We love you guys. Michael, thank you so much for being on our show.
Absolutely. Thank you for having me on.
Michael,
Melissa?
thank you. Yeah, we're going to have you back because, again, this could go on for another hour. But I'm so grateful for your time. And I think you brought the sunshine here today because we were in the 60s. So thank you for that. And happy St. Patty's Day, everyone.
Happy St. Patty's Day. Until next time, guys. See you soon.
See you
care,
soon.
everybody.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.